everybody, welcome back to Focus Investing, where we follow one course until successful. Today's episode, I'll be talking about the top 3 cheapest tech stocks. But before we get into the video, be sure to have been subscribed, and also please make sure you hit the like button as it helps us out with the algorithm. So let's get right into it. Here I'm looking at Facebook, but before we do that, let me give you a breakdown of their financials. As you can see right here, their profit margin for Facebook, currently their market cap is $715 billion, which is a huge sum, but at the same time, it is kind of crazy to me that they're not a $1 trillion company yet. Their trailing PE is 28.63, and their forward price to earning ratio is 23, which is a little bit expensive. But given that this is a tech stock and valuations tend to be tricky, I wouldn't be too concerned with a 23 PE. If you look further down here, their profit margin is 32%. Their return on asset is 10.96%. And then most importantly, their revenue is close or nearing that $80 billion mark. And their revenue continues to grow. As you can see, their quarterly revenue growth is 21%, which is really high. And then their quarterly earnings growth is almost 30%, which is amazing. And Facebook is known for having huge cash reserves. As you can see, they have $55 billion in cash. And then their total debt to equity ratio is 9.47. And then their operating cash flow is $33 billion. And then the amount of short that is in float currently against Facebook stock is only 0.98% of existing shares or outstanding shares. And if we look at the charts here, immediately one thing that stands out is Facebook has been pretty flat since hitting its peak back in early September, late August, early September. It hit a high of $307, and since has pretty much failed to return to those levels as the cyclical rotation to value-oriented stocks has taken hold, right? But also one thing that does stand out, it looks like that $250 mark seems to be the support for Facebook, and currently the stock itself is at a $251 mark, and looks like it's showing signs of an upward reversal, right? So you're seeing that the stock itself is reversing, and if it clears above this exponential moving average, that is a good indication that the stock itself is positioned for maybe an upward rally of at least, let's say 5% before it hits another resistance with the SMA, which is the single day moving average. And then if it clears above that, I think we're positioned to rally to at least $320 or $330 per share. So this is a stock that I consider to be cheap relative to where other tech stocks like Microsoft, Amazon, and Apple are being valued at. And then our second stock that I wanted to look at is, we could start off by looking at a technical breakdown, is Alibaba, and this is a stock that has been facing a lot of pressure, downward pressure, partly because of the ongoing, Chinese authorities have basically started an audit on the company to see if they're violating antitrust laws and engaging in monopolistic behaviors. So due to those reasons, and also some fallout between Jack Ma and the Chinese Communist Party, the stock has largely been selling off recently. But again, those are some of the short to medium term headwinds facing the company. But as long as we can clear that, I think the stock itself is positioned for a great comeback. This is a stock that, it is hard to understand, just because the business model for Alibaba is not the same as the business model for, let's say, other stocks out there, comparable stocks like Amazon, because they are in the same e-commerce space. But again, when you're dealing in totally two separate markets, one is in predominantly in the Chinese market, and then the other one is in the American market. the business cannot be as linear or comparable. But one thing that does stand out here for the stock is looking at the RSI, which is the relative strength index. It looks to be a little bit, nearing the top trough, where it's looking like it's overbought. And as you can see, it's running up against that single day moving average, which could be a potential resistance. But if it clears above that, then I think we're positioned to probably rally up to that 319 and maybe even clearing above. The next resistance would be that, right? But let's take a look at the financial analysis of Alibaba. So the profit margin for Alibaba is 22.5%, which is great. Their return on asset is 4.71%, which is good. Return on equity, even better. Their revenue currently is, at least Yahoo Finance is undisclosed, but their quarterly revenue growth is 30.30%. Their diluted EPS is 9.1%. Their total cash, again undisclosed. Total debt to equity ratio is 14.78, which is comparable to other e-commerce giants that are in this space. And then if you look at their operating cash flow, it's also undisclosed, but again, overall, we all understand that this is a big player in the e-commerce space, not only in China but around the world, and has more opportunities to continue expanding and growing. Last but not least, let's take a look at Salesforce. This is a company that is doing really well, especially with more of their recent acquisition of Tableau, and more recently, they also acquired Slack. Both are really great products. Tableau is largely related to data analytics and visualization, and Slack is for internal communications, and has a huge market lead. They are an entrepreneur in that space, and I think their acquisition by Salesforce will only further enhance their ability to be able to drive growth. But investors are not very optimistic about that. But overall, if you look at their financial reporting here, you see that their profit margin is 17.53%. Their return on equity is 9.67%. And overall, their revenue is $20 billion, but I think this will continue to grow. And then their quarterly revenue growth is 20% as well. Their EBITDA is $2.2 billion pretty much. Their total cash is $9.5 billion, so they still have a lot of cash. But their total to debt to equity ratio is 15.4, which is a little bit high. But given that they're a high growth company, they could really make up for that in the next 3 to 5 years. Their operating cash flow right now is $4.26 billion, and then their short or outstanding short compared to their shares is 2.38%, a little higher than both Facebook and Alibaba. But if you look at the chart, Salesforce, one thing that immediately stands out is the stock actually hit its initial highs back in September 1st, and that's when it hit a high of $284. And since the stock has pretty much been pretty flat, as you can see right here, and more recently, the stock has been selling off on the news that the company is acquiring Slack. Again, in the short term, of course, they will have to put a down payment of $28 billion, which could be a huge sum given that the stock itself is experiencing a lot of downward pressure simply because of that. But if you look at the RSI, the stock seems to be pretty cheap. And also, if you look at the MACD, the stock has largely been pretty flat, as indicated by the MACD, not a whole lot of movement one way or the other. And also, if you look at the ADX, it looks like there is a continued pressure to sell. So until the stock breaks above the exponential moving average, I would not seek to enter any new position. But again, the pricing is starting to look very attractive, and we'll see if it can hold above $200 per share. But I think this is a time to actually buy, because if you're a long-term investor, there's definitely a potential for great return with Salesforce as they continue to consolidate and continue to acquire new businesses that can add to their portfolio, and also growth potential, right? I hope you enjoyed this video, and if you did, please be sure to subscribe, and also don't forget to smash the like button, as that helps us out with the algorithm.